speculation building about Packer, as Carson was just saying, selling out of Foxtel. So that's the Consolidated Media 25% stake in Foxtel.
That's right, lots of opening calls, and I mean, it is still in very early stages. So obviously the speculation is James Packer will be selling his 25% stake in Foxtel, and the first report was an AFR report. He's selling his majority stake in Consolidated Media Holdings, which is a 25% owner of Foxtel. And amongst the buyers, there's belief that we will see Telstra and News Limited lining up. But we have already seen the ACCC speak up, and that is going to be one of the biggest hurdles. So a few more details have been slowly emerging. The AFR article does suggest that Packer would sell his holdings at about $4 a share, which will mean that the initial deal is going to be worth about over $1 billion. Now, as I mentioned, the ACCC is going to be the biggest hurdle. They have warned against Telstra increasing its stake above the current 50%. And Seven West, of course, is also touted as another potential buyer. And that does bring a lot of concern over consolidation in the media sector. But the market seems to think that Telstra is the natural choice. But as to what will actually happen, we still have to wait and see. There's still plenty of rumours floating around, nothing really definite quite as yet. But I mean, obviously the market is already speculating on what Packer does plan to do after his sale. And there's suggestion that he will continue to buy into Echo Entertainment. So quite an interesting story and definitely closely watched.
Yeah, that's a big one for us to watch. Now, what about, Christine, the broader market today? We have, I guess, softer leads, very, I don't know, skittish kind of leads, and such a big weekend too. What are you actually expecting today for the local market?
That's right, it is pointing to a very soft start on our local market. Now, this week we have seen quite a bit of consolidation, seeing the consolidation levels around our previous support levels, and I guess the positive there is it does suggest the market is simply just resting before moving upwards a little bit further. Now, this week we've also seen very low volumes, so with that weak start we may not get the momentum we need to end today a little bit higher. But the low volumes is no surprise, given that a lot of major markets across the region were on holidays this week, and today the Japanese market's still on holidays, so we are expecting a pretty quiet day. Now, overseas we did see the US stocks remaining fairly weak. The Dow was down about 62 points, and once again it was those macro events which weighed on sentiment. The ISM non-manufacturing index was down in April. That fell much more than expected, down to 53.5 from 56, whereas the market was expecting a fall to 55.5. And we also saw consumer outlook reading weaken, and that was despite jobless claims falling more than expected. So a lot of weakness in the US. And then, of course, we can't forget about Europe. The ECB have wound up their latest meetings and disappointing investors after really giving no indication of further easing in the region. So we did see most European markets a little bit lower. European markets saw financials falling heavily as well. So risk very much off the table, and that was despite a reasonably successful Spanish bond auction. They did sell 2.5 billion euros of debt. There are a number of big risk events coming up. So for our local market, our focus is going to shift to those international events. The non-farm payrolls from the US tonight, that's a big one. We're expecting about 165,000 jobs to be added in April. There's also the French and the Greek elections, so plenty of nervousness for global markets as well as for our local market. But a weak start is expected. I believe the SPY is down about 12 points.
Yep, okay, and just a really quick one to sum up kind of the currency trading overnight, main themes, Christine?
Absolutely, a substantial pullback in the Aussie dollar. We are trading below 103 US cents. That is because the commodities like gold, copper and oil were all weaker last night. But worth a mention is the New Zealand dollar. That was one of the worst performers, dropping to a 3-month low after a report showed unemployment rising unexpectedly. So the New Zealand dollar losing about 0.5% yesterday, but our Aussie dollar is weaker. We do have the RBA minutes out today, and that could bring further pressure to the Aussie.